Today, I'm gonna cover my top 10 holdings by weight in my $1 million plus growth stock portfolio. Now, if you follow the channel, you know I did a video just like this in early January. Today's video is gonna be an update because several positions have changed. Not only are there new stocks in the top 10, the ranking and the order has changed as well. Now, a reminder that all these companies I plan on holding as long-term investments for 5 or more years unless the story changes. I'm gonna go through my top 10 holdings by rank, by concentration in my $1 million plus growth stock portfolio and give you a few reasons why I'm bullish on each. Let's get started. Nvidia takes the crown. It was 5th the last time we did this video. Today it's number 1. Now that's fitting because Nvidia is the king of AI. That was the last video I did, and if you have not seen that, when this video is over, go check that out. The main reason the concentration has gone all the way to 5.74% is because the stock is much higher than it was in January. The PE ratio on this right now is 131, so it's very expensive. I wouldn't be chasing the stock right here.
I like to see when the stocks are high, okay, and I like to see when they're low. That's the big thing.
Interesting.
And sometimes they're really high. Sometimes they're very high. The stocks, and you go very high. That's when you
high.
want. Yeah. That's when you want to sell, when they're very high.
Woo.
You buy them when they're down very low.
This was a $108 stock just in October of 2022. Dividend yield, it's very tiny, but it does pay a dividend, 0.07%. Now with that said, I've owned Nvidia since 2018. I was buying it in the 30s, and my yield on cost is 0.41%, which is quite a bit higher. And of course, you know what Nvidia does, and really their focus is going to be AI. I'm going to cover that in more detail on the next slide. So reasons to own Nvidia stock, even though it is expensive. If you're thinking long term, this company has lots of room to grow. Let me explain why. Nvidia is the king of AI. They are the leader for AI semiconductors. And you could argue they're the top AI stock in the world, if not number 1 on your list, at least number 2 or 3. What's exciting about Nvidia is they have a next phase of growth that's just getting started, and that deals with software. Nvidia's enterprise AI software essentially serves as the operating system for AI, and it's going to be very difficult for competitors to replicate this. So even if they can match the hardware, say AMD can match Nvidia's hardware, it's going to be very hard for AMD to replicate this software. Now this will ensure that Nvidia holds a top spot, probably number 1 for years to come. Listen to this. Their TAM just for AI is $600 billion. Their market cap is around $600 billion today. But just AI, the TAM, the total addressable market, is $600 billion. And $300 billion of that $600 billion is going to be hardware, and $300 billion is software, and it's really just getting started. So Nvidia is number 1, ticker NVDA. Microsoft has lost its crown. It was number 1 last time, this time number 2. Concentration 4.85%. This is trading at a PE ratio just under 29. Does pay a dividend yield of 1.07%. This is a DGIF stock. Now I've owned this stock since 2012, much lower, also in the 30s, and my yield on cost is almost 9%. And of course, you know what Microsoft does. They're a mega cap tech stock. They're really a conglomerate when you think about technology. Of course, I really love the cloud services part of their business, Microsoft Azure, and Microsoft's already strong in gaming, but Activision would really take it to the next level if this acquisition gets approved. But of course, Microsoft, think of Microsoft 365. So it's a critical, mission critical component for business, for enterprise business. They also sell, of course, computer and gaming hardware, and what most people are excited about right now is going to be ChatGPT. So when you think of AI chatbots, and to think about Nvidia, that first stock we covered, those chips are really going to fuel those servers, those supercomputers that really have to process this data for AI, that have to train the language models and so on. But cloud services like Azure, like Google Cloud Platform, like Amazon Web Services, that's also going to be the fuel. So semiconductors and cloud services are really the fuel for all the secular growth trends that we think about over the next 5 and 10 years. And Microsoft is a big part of that. How good is your memory? Do you remember the third stock last time? It's the same this time. It's Apple. My concentration is about 4.74%. The PE ratio today is just over a 25. Dividend yield, it's small, it's 0.61%. This is another DGIF stock. Now I've owned Apple since 2015 and my yield on cost is over 3%. So compound interest is the 8th wonder of the world, and stocks like Microsoft and Apple will give you those dividends. You can drip those dividends and compound, and over time these are very powerful stocks to own in your portfolio. And of course, you know what Apple does. And when you think of Apple, what do you you think of first? It's going to be the iPhone. Now, the company has diversified outside of just Apple hardware over the last several years, and their services segment has grown significantly. Now, services are going to give them less cyclicality with their revenue, which is a positive. And I think there's lots of potential growth for Apple in the future, especially when you think of Apple Healthcare. So you think of like Apple Watch. And just last Friday, we released a video. It was an exclusive video on Patreon, and it was covering growth stocks to buy. And we talked about one stock that deals with diabetes. Now, I believe that Apple could be a disruptor within that space, and several members in the community agree with this as well. So Apple has an ecosystem that's really a cult following. You think of Tesla and Apple fanboys and fanatics, they're gonna buy these products. That community is really strong still. And just use me as an example. I've got an iPhone. I'm talking to you on an iMac. My car has iPlay. I've got 4 different Mac computers across my home. And my theater room is powered by an Apple 4K TV. Previous rank for Snowflake was number 2. It's now gonna be number 4. Concentration's about 4%. Now, this does not have a P/E ratio, of course. It doesn't pay a dividend, of course. It's very expensive. It's hyper growth. It's in the cloud arena. It's not a SaaS. It's not software as a service, but it is in that cloud arena. It's going to be database warehousing as a service. So think big data.
Okay, across Snowpark, cloud apps, you're looking to turn Snowflake into more of a platform that developers build on top of. And I'm wondering how you see things like generative AI potentially coming to play in that. You were on the call last night, I think very pragmatic. You said it's not clear what the business model is around generative AI in specific cases, so you don't want to get ahead of your skis. But how might that work for investors who want to understand what the benefit might be if you succeed in this platform strategy?
Well, I mean, if you, the world of AI, if you want to generate interesting questions and interesting answers, you need data. Data feeds these models. Data is also a tremendous gravitational pull for applications, and we have data. It's growing in leaps and bounds. We're already connecting to large language models. People are really combining structured data from Snowflake with textual data from Wikipedia and all kinds of different things. So we're going to be a tremendous feeding source, for the AI generation of applications. We're already at for machine learning, obviously, all kinds of new applications.
And this is going to be much more mission critical than a lot of other software technology companies. Now, it is consumption based, so there is some cyclicality with that, but Snowflake's last quarter was quite strong. But generally with cloud, we're going to use something called EV NTM revenue. Now, this is the most expensive stock in that universe at a 15.2x. So I tell most people if they're buying Snowflake, it should be a spec stock because it's very expensive and you might not understand the company. Now, Rule of 40 is another metric we generally use for SaaS. And even though Snowflake's not SaaS, it still does have a strong Rule of 40 number at 78%. And this is big, especially when you think of these hyper growth stocks. A lot of companies in that SaaS arena do not have positive free cash flow. Snowflake has positive free cash flow of 24%. They also have net dollar retention. So that means keeping their customers and expanding the usage within those customer footprints. Their net dollar retention has 158%, which is very strong. If you're not familiar with Snowflake, I have an entire playlist on the channel. You can check it out and dig in deeper. But in a nutshell, Snowflake enables data storage, processing, and analytics that are faster, easier to use, and far more flexible than traditional offerings. Think big data. Now, the primary reason I own this stock is going to be for Amazon Web Services. And I wish I could buy just the stock Amazon Web Services, but I can't. Now, previously Amazon was 4th and now it's 5th, primarily because the stock hasn't really moved much, where a lot of these other companies have gone up quite a bit since January. My concentration's just under 4%. And right now, Amazon does not have a PE ratio. The price to sales is 1.84. Market cap is just under $1 trillion. Of course, it used to be in the $1 trillion club. Now it's not. It's $947 billion. Now, Amazon originally started as an online bookstore, a bookseller, and they have really morphed into this huge big cap tech conglomerate, a lot like Microsoft and Google. Now, of course, most people think of their retail business, e-commerce, but really Amazon Web Services is their cash cow. And one of their new cash cows is advertising. In fact, revenue for advertising has grown as large or larger as YouTube, which you're watching right now. And of course, they have Amazon Prime for digital streaming, digital music. They have a whole ecosystem. But this is another big play when you think of artificial intelligence. So again, you go back to those pick and shovel plays, cloud computing and semiconductors. And we call semiconductors the new oil, and cloud computing is really a big part of that as well, of course. Now, this is important, guys, so please listen up. If I were a young investor today and I was building a growth stock portfolio, the stocks that I would buy would probably look different than what I own now. I've been investing almost 25 years and I've had a lot of these stocks for many years. So what I'm gonna do for you is later this week, I'm gonna release a new video and it's gonna be called the 12 stock portfolio. Now, this is gonna be a growth stock portfolio with people that are investing long-term for 5 to 10 years. And I'm gonna give you my 12 stock picks that I would buy today if I were starting a growth stock portfolio investing long term. So if you're new to this channel and you're not a subscriber, make sure you subscribe and click that bell to get notifications. As soon as that video drops, you're gonna get a notification. Plus, you're not gonna miss any future videos as well. I'm trying to grow this channel to over 40,000 subscribers in 2023, and you can help me out by subscribing today. Number 6, AMD, same as last time. My concentration is just under 3.65%, and the PE ratio is a 97.6. So another expensive one. It's run pretty hard from its lows. Market cap, $132 billion. Now, the reason I like AMD, they acquired a company called Xilinx, and they're getting more into data center. They're doing a lot more in data center and AI. Additionally, Xilinx had great relationships when you think of aerospace and defense, space exploration. And of course, you already know AMD for CPUs. And they're still strong in that area as well. So earlier we talked about Nvidia, and that's more focused on GPUs. But now when you think of AI data center, you've got two big players, and that's going to be Nvidia, which is the top dog, and then AMD. Now, I forgot to mention this earlier, but another reason I'm bullish on Nvidia, they're getting more into the automotive segment. And the growth has been very strong there over the last several quarters, and it's still a very small segment of their business. Lots of room for growth, lots of total addressable market. And AMD's same kind of deal. They're working more in communications, also getting more into automotive. And I think both Nvidia and AMD, in my opinion, they're must-own stocks in really any portfolio. These companies are the fuel for the future, for all the innovations and secular growth trends we think about, the new oil. So this stock was not listed in the previous video, and now it's number 7. It's Tesla. My concentration is 3.1%. Now the PE ratio for Tesla is a 48, but if you look at the forward PE, it's in the 20s. Market cap, $547 billion. If you remember, this was once $1 trillion market cap, and this is really a green energy conglomerate. So I like Tesla primarily for EVs, electric vehicles. And if you look at 2022 automotive sales, only 10% of global sales were EVs. So a ton of total addressable market. Of course, there's competition here, but there's plenty of room for Tesla to grow. In addition, you think of Tesla Solar, you think of Tesla AI, and maybe Optimus will be a thing someday, and you'll have a robot that's gonna serve you some tea in your house or whatever. But this is an AI company. A lot of people call it just an automotive or a car company. This is really an AI company. And when you think of autonomous driving in the future of automotive, Tesla is going to be a major player. They've got that cult fan base, a lot like Apple. And I know a lot of people are bearish on this stock. I'm bullish, and I think the company is going to do well over the next 5 and 10 years. If you're not in our private community, go check it out. Patreon.com/firedupwealth. We also have a Discord. I promise you, you will not regret it. Join us today. Now, before I go on, I need to announce this video is sponsored by the Motley Fool. If you'd like to see the 10 best stocks to buy now, visit fool.com/firedupwealth. So Alphabet Google was number 7 last time. Today, it's 8th. Now, I personally own A shares. That's GOOGL. You can also buy C shares. That's GOOG. The only difference is voting rights. I prefer the A shares. My concentration, 2.87%. It's trading just below a 20 PE ratio. Market cap, over $1 trillion. So this is a mega cap tech conglomerate, $1.17 trillion. And if you aren't familiar with the history of Google, in 2015, they made a parent company. It's a holding company, a conglomerate called Alphabet. So Google is one of those companies under that holding company, and they own a lot of other stuff, as well as what they call moonshot plays. So of course, Google, Android, YouTube, which you're watching right now, Fitbit, Nest, Calico, DeepMind, DoubleClick, Verify, Waze, X Development, Waymo, which is going to be autonomous vehicles, and most recently, Bard AI. That's going to be an AI chatbot, and that's going to be integrated into Google Search. Just like with Microsoft, they're integrating, of course, ChatGPT ChatGPT into Bing into Edge. Now, Microsoft does not own ChatGPT, but they do own part of that company. Google has their own AI chatbot in-house, and that's Bard AI. And I think both Microsoft and Google will benefit from these trends. In fact, if you look at my top 10, these plays are all going to touch either semiconductors, artificial intelligence, cloud services, or automotive EVs. That's really the theme that I'm going for when I'm thinking of growth for the next 5 and 10 years in my growth stock portfolio. And here's another great example. This was not listed last time. Now the stock has gone up a lot since January and it's grown into the 9th spot. This is INDI Semiconductor. My concentration is 2.8%. This is a small cap company. It has a 10.51 price to sales. The market cap is only a $1.59 billion market cap. So this last quarter, management guidance was solid. And as they told us, I interviewed the CEO of INDI Semiconductor a year ago on this channel. INDI plans to be profitable by the back half of next year, 2023. Are you guys fiscal year or calendar year? Calendar year. So basically 18 months from now, your goal is to try to be profitable by the end of next year.
That's right.
Okay, 2023. And he told us that they're going to be profitable the back half of 2023, and they confirmed that on the last earnings report. So the second half of this year, 2023, they expect to be profitable. They also recently acquired Geo Semiconductor, and that really brings a lot of positives, including new customers, new capabilities, new countries that they're located in, new partnerships and relationships, as well as that accelerated path to profitability. And here are some reasons to buy INDI stock. Now you have to be careful chasing it above $10. We were buying this in Discord around $6 a share. But this last quarter, INDI reported GAAP EPS of negative 15 cents. That beat by 5 cents. Revenue of $33 million. That was up 74% year over year, and that beat slightly. Now these guys have been crushing, up 100% year over year, 75% year over year. They keep beating every single quarter. So they expanded their Q4 non-GAAP gross margin to 52.2%. That's solid for a semiconductor company. And this is really laser focused on automotive. And the total addressable market is absolutely huge for automotive. And that's why I'm so bullish on companies like INDI Semiconductor. So INDI's 2022 revenue, they delivered $110.8 million. That was up 129% year over year. They've also had some recent wins that are going to be huge. They also had wins last year that really were on the books for the end of this year. So they have solid backlog. And again, this is a pure play focus on automotive semiconductors and related equipment. And they're really at their hyper growth stage and they're nearing profitability, as I mentioned. So INDI has a $60 billion TAM and they're under a $2 billion market cap right now. Also $115 billion plus by 2030. There's so much room for INDI Semiconductor to grow. What do you guys estimate your total addressable market to be? And maybe you can give me a time frame like 2025 or whatever number is convenient at the top of your head. Like what kind of TAM are you guys looking at?
2025 semiconductor market will be more than $60 billion in automotive. And as I mentioned before, we're shooting at 2/3 of that market right now in terms of what we can address. And, I don't accept a business plan that targets anything less than 30% market share into anything that we enter into. So we've got some pretty aggressive plans here. We do want to be viewed as serious contenders in this entire market. We don't want to be viewed as a small company for very much longer. And we're on a pretty good path to get there, I think.
They don't have a PE ratio yet, although they should soon. Right now, they trade at an expensive rate here, 11 price to sales. So INDI's trading right now at about a $1.5 billion market cap, slightly higher. But just for simple math, if you wanted a 10x return, a 10x stock, you'd need a $15 billion market cap. Is that possible for INDI Semiconductor? I think the answer is yes. And again, the CEO told us a year ago that INDI Semiconductor was going to be profitable in 2023. So make sure you subscribe to this channel and click the bell for notifications so you don't miss updates like that. So many of you missed that interview and you really missed out on a 50% return on this stock just in a few months. If you're interested in seeing my entire portfolio, you can go to patreon.com/firedupwealth and you can see all 60 of my stocks. I've got an exclusive video that breaks down everything. It shows you all the different percentages, all the sectors I'm in, the entire portfolio and commentary. It's about a 30-minute video. Again, check out patreon.com/firedupwealth. And any tier will get you that video. So what is number 10? This is another brand new one. This was not on the video last time. And now it's the 10th position. It's going to be ACLS, ticker ACLS. My concentration's about 2.77%. And the next stock after this, so the 11th pick, is going to be SITM. So that's 3 small cap semiconductors back to back. And I really own about the same of each. So depending on the day, any little fluctuation will make these move in different orders. ACLS is not that expensive, 22.45p ratio. Go look at some of the metrics. Go look at the finances, look at the growth. You'll be blown away at their recent growth over the last several quarters. Market cap, only $4 billion. Another smaller cap type company. We bought this stock at $1 billion market cap in Discord. Make sure you join our private community. Again, patreon.com/firedupwealth. So if you're not familiar with this company, the next slide is going to break it down nicely for you. But in a nutshell, these guys are a semiconductor equipment manufacturer. So they're going to sell that semiconductor manufacturing equipment to foundries. And the foundries are what make the chips. They produce the chips, manufacture the chips. So ACLS is a pick and shovel play, and I own it primarily again for automotive and EV. Now they're much more diversified than just automotive and EV. INDI is laser focused on automotive. ACLS, around 60% of their business focuses on automotive, but they're also in industrials and other areas as well. And as I mentioned earlier, if you look at the global sales for EVs, only 10% globally were electric vehicles in 2022. So lots of room for growth. Huge total addressable market. And ACLS has a $4 billion market cap. Again, we were buying this when it was a $1 billion market cap in Discord. Join us there at patreon.com/firedupwealth. This has a 22p ratio with strong growth and profit margins. And really the only risk for this company, why you might not want to buy it and why the stock probably isn't higher than it is their dependency on China. So there it is, guys. My top 10 holdings by concentration. Make sure you subscribe to the channel. Click that like button. Drop me a comment. Appreciate your time and attention. Have a great rest of your day. Take care.